Uh, just before we get in our next guest as well, here's what's striking to me. A lot of talk around how the markets have retreated, and yes, that's all true. But here's some key data points or some observations. One, that the market is now falling so I want to say the reverse really. So while my page says this, the lower volumes are dragging the market, I'm saying that the market now is falling on very low volumes, and which is actually a good sign, because typically if market falls on very heavy volumes, that means that there is incessant selling. Now we are seeing are we coming to the fag end of this selling? Because typically that's what happens, that when the market is coming at the end and trying to bottom out, the last part actually could happen on very low volumes. So Feb actually saw the lowest average volumes traded in the last 1 year. So ignore this, okay? But the average turnover in Feb was at 75,000 crores versus the peak of 1.3 lakh crores that we saw in June. So the volumes have come off. Maybe there's a chart which shows this as well, but if not, the other piece that I do want to, right here. So look at this, right? The average turnover, and look at the average turnover that happened in June. Now you could argue that June was the election, budget, etc. But look at the petering down of volumes out here. And we are at the lowest level, lowest volumes since maybe November 2023. This to me is very striking. The other piece is, yes, you shouldn't look at the small cap index as an absolute index because it's a very diverse index. But here's some data, and let's get the data on the valuations of the small cap index if we can up next. So the small cap 250 is trading at 21 times FY26 EPS of 650. Now FY25 EPS is at 605. So I have only taken in the Bloomberg consensus estimate is estimating only 9% growth for the small cap 250 in FY26, which, well, you could argue is conservative. Even if it is not, you may argue it. Let's assume that you believe that this is optimistic. I think that would be wrong, because typically people would presume that earnings growth of small caps would be between 16 to 18%. Here, the assumption is only 9%. The 10-year average of this index is about 28 times. We are already trading at 21 times FY26. Are we coming to the end? And remember, Quant MF does believe so, because in the morning note that they have put out, Sandeep Tandon and team, they say that they are now actively participating. Okay, here's the quote. They are saying that the Nifty 500 represents the top 500 companies based on full market capitalization and average daily turnover from the eligible universe. Let's move on. I think the more important part, effectively in initiations about the free float, etc. But let's go towards the end of the note, because that's the key thing. What Sandeep Tandon is trying to say via this note is that because they are seeing valuations looking attractive, they are actively participating in mega large caps, and the mid caps and the small caps as well. So the street and select pockets are starting to turn bullish. Let's ask Ajay Bagga if he's turning bullish as well or not quite as yet, and why so. Mr. Bagga, thank you so much for joining in. Would love to understand, where are you on this argument? Is this the time to buy the dip, or is this still the time to stay on the sidelines?
So, for me, especially the retail audience who favor your channel, Neeraj, I would say every time is a buying time, and you should regularly keep buying. Now, as far as the bottom of the market is concerned, mathematically we can prove that, okay, now the valuations are this, valuations are that. One, valuations is an art. It's not a science. We don't know if it will actually come at 9%, or as you said, it might be 7, it might be 11, it might be 15% earnings growth also. So we have to look at history. We have to then aggregate it company-wise and make a portfolio. I would say we are probably about a couple of months into the bottoming process. It will take time. It won't happen very rationally, very scientifically, that the market participants will realize that, say, the Nifty is now below its 10-year average trailing PE. And now let's start buying. That won't happen. Mostly the momentum on both sides, Neeraj, it takes the markets up or down. So there is an overshooting that happens. Right now, we might be in the overshooting. That we will know a year down the line that, yes, This was the time when the turn should have happened, but the market overshot and then it made a turn. But definitely, yes, it's not the September end market of all-time highs. Is it going down 10% more? I don't think so. I think there's a very little probability, unless there is some shooting war or some geopolitical big event comes in. I think overall, the tariffs of Trump will not have that big an impact on India. They might bring in recession in pockets of the world. So that issue remains. But overall, I think we have weathered it well and we are near to the bottom. Now, whether it happens this week or 2 months down the line, it's an art, it's not a science. And I would say these numbers just give you an idea that now it's looking good. Is it very compelling? I think right now people are really hurting, with the 94 lakh crores of valuations that have evaporated. It's tough to tell people to bring in chunks of money. I would say regular money over the next 6 months, keep investing, because first the bottom will form. Recovery will take time again. Recovery will follow corporate earnings. Now we have a base effect coming in from June quarter. You will see better year-on-year numbers coming in because the slowdown really happened June and September. December, we have seen the small incipient recovery starting, and probably earnings bottomed out in December. So the next 9 months, from April to December, will give you a good base effect. And then markets will react in anticipation of that. So I think bottoming maybe 2 to 3 months from now, and then recovery takes another 3 months. And by year end, hopefully, we would have reached back where we were in September of 2024.
Ajay, hi, morning. Alex joining in as well. And your point is well made. Very tough to call levels and when that bottom is hit. Of course, the wisdom of retrospect is flawless and all of that. But I'm just wondering how you're positioning yourself, because there is word that some smart money is also venturing. And I know that the large conversation has been around finding quality, finding solace in the large caps. But some smart money venturing towards a few mid-cap names also that have gotten very heavily battered over the course of the last few weeks. How are you positioning yourself?
We have to go with free cash flow in this kind of a scenario because we are not in an early cycle. We are in a late cycle. It is a structural growth story of India. It is a structural bull market. It has got broken on the small cap, mid cap parts. So it is definitely, we have not seen capitulation. If, capitulation had happened, another 10%, the markets had gone down in 2 weeks, you would have happily said, go all in. I think that has to still come in. So that's why I'm worried. The issues are not anymore domestic. I think domestic, we have turned the corner. It was unfortunate that the 4 months of national elections delays and then the budget coming in by July. Around September, we were as much as 30% behind in terms of the government expenditure. We have caught up to about 9% behind now. And there have been big chunks coming in December. The capex went up 91% year on year. January, it went up 51%. So heavy lifting has started. We'll probably end at 9 lakhs to 9.5 lakh crores of capex for the full year. But it's giving good momentum for April. And then the consumption boost of 1 lakh crore starts hitting it, say 8 lakh crores.
Right.
8,000 crores a month starts coming in. So we'll enter April with a better momentum. Year on year earnings, Neeraj, will look better come July as the June numbers come in. So we are setting up. We are setting it up. But smart money, all that, there are even options right now also. If you find fairly valued stocks with good free cash flow, the narrative stocks you have to avoid because this is late cycle.